So I want to get started. Last week, you made you shared a post on the Brokers Are Better Facebook group. I think it was a great post. Honestly, it was a great message. And basically, what your message is, I'm just actually pulling it up right now. So you posted, please read and stop complaining, and it was a really good post. Honestly, you went into the details of all the time that people are wasting right now, and what you can be doing as a loan officer to get deals done. Let's talk about that a little bit. What drove you to share that?
Well, the first thing is, obviously we all know that things are tough right now. It's not the same as it was a month ago, 2 months ago, or 6 months ago. So when I see people post things, I have sympathy for some. I understand it's difficult, but a lot of the stuff that I was talking about is more just self-driven, right? It's like what really got me was people complaining about locks, and it was like, man, UWM, I'm never working with them again. They didn't extend my lock, or Home Point didn't extend my lock, and I had all these people that were talking about. If you go to Lakeview, they're doing 15-day lock extensions. And wow, Freedom Mortgage, they're doing 30-day lock extensions. And I'm thinking in my head, I'm like, how do you even need a lock extension at all? Right? Let's just really break it down. So a lock extension is needed if you break your lock. Well, what's the number one reason that people break their lock? And I started to think about it, and I started to look at my pipeline, and I started to look at some of my loan officers, and I'm like, any single person that's posting that they're pissed at UWM for breaking their lock, if they rewind from the start of that loan, they can kind of point at themselves. And so the way that I started it was, let's look at why people break their lock. So either one, you didn't lock it fast enough. And I think that we were seeing this a lot more with, the major banks we work with, either Home Point or UWM. But at UWM, they allow you to do custom locks. It's great. You get to give the client a better lock period. And, why do you need 30 days? We can lock you for 18 days and get better pricing. If you were locking for anything less than 30 days, knowing there's a pandemic going on, that's your fault. So that's step one. Step two, I started to look at my own guys, and started to look at when somebody locks a loan, what is the time that it takes from the time that they lock it until the time that they actually submit it and it's approved, right? And I just started going down our company pipeline first. Before I wrote that post, I'm like, okay, well, let's look. We funded 245 loans last month. That was just with UWM, by the way. Okay, well, I'm looking at it and I'm like, well, there's some people in our office that are asking and bitching. They're complaining about locks. And the average time was like 4 days. So they locked the loan on a Monday, and it didn't even get disclosures out for 2 or 3 days. Right? So there you go. I mean, just right there, if you're going to lock for 30 days and it's going to take you 4 days to get disclosures out, then it's going to take you 3 days to get an approval or 2 days to get an approval. Well, we're at 6 days right now. And that's assuming that you didn't do yourself a favor and submit your file right away. How do you let 24 days pass where you need a lock extension?
It's a great question. Right? Honestly, I think that's something that Todd Bitter talks about, a lot. And you obviously shared in this post. It's like, if you want to do volume, you're forced to be efficient and you're forced to not waste time. So everything's about, getting it done quickly. And the, people that are saying, like, I saw people post like they're on their second, or third lock extension. I'm like, what is going on here, guys? Like for all intensive purposes, like somebody, you need some self accountability, because this is not a lender issue. This is a you issue. Did you not lock it long enough from the get go? Did you not set good expectations with your customer? It's more of an internal conversation than it is external. Fundamentally, the people that are like you, that are doing $150 million in production, or we're doing $50 million in production, they're not extending locks 2 to 3 times. For you, how are you maintaining your value proposition? Where'd you go? I lost you.
No, I'm. Give me 1 second. I disconnected something to try to move it, because I'm looking down at you rather than up at you, because my camera. All right, can you hear me now?
Yep.
Am I back?
Yep.
All right, cool. So basically, I mean, the way that I, repeat what you're saying.
So basically, how are you maintaining your value proposition and staying, obviously, focusing on what you can focus on right now? You there?
Well, I mean, basically, you got to look at. Can you hear me? Can you see me?
Yes, you're good. You're good.
I think I might have lost you. Give me one. Okay, you can see me.
Yes, we can see you.
Okay, perfect. So basically, I mean, it comes down to what are the type of loans that you can do right now. So if you have 640 and below credit, and you know that right now it's having a hard time for anybody to do it, why are you even looking for a lender for it? I mean, I understand that you want to help out your consumer and your clients, but you're wasting so much time on something that you don't even know if it can even get done, right? And so Shelby and I, we talk all the time, and it's like, put together a pipeline of deals you can do right now. If you have down payment assistance loans right now and you're worried that you quoted the client and now you can't do it, you're doing the client a disservice. Why are you going to put somebody in a down payment assistance loan where the only reason they need down payment is they don't have a savings right now. They might not have the best credit score. Well, look at what's going on in the economy, right? You have unemployment rate at an all-time high. You have, people losing their jobs. You have people with so much uncertainty. We don't know what's going to happen in the market. Why even community, the neighborhood that person's going to buy in, that person even at risk of just so you can really get a commission, right? Because at the end of the day, it doesn't make sense for that person to buy right now. And so what I've been doing is I've been doing separate pipelines. So I have a pipeline that I have of, hey, these are kind of on the back burner, right? These are people that we can't do right now, but we're not going to forget about them. I put together a really detailed, email that I put out, and I sent it to all my clients. And I said, hey, just so you guys know, due to market conditions, these specific programs are currently on hold. What I recommend during this time is, I haven't forgot about you, and don't, lose the drive of wanting to buy a house. But at this specific time, the banks are not lending it. So let's work on either getting your credit up in the next 2-3 months, so that when this thing all kind of settles down, you can, maybe buy without down payment assistance, or just wait out for 3 months. If in 3 months you lose your job, you just screwed yourself, right? And so it's really just focusing on what we can do now, rather than complaining about all the things that, that are out of our control. You know what I mean?
So what are the things you're focusing on right now?
Well, right now I'm focusing on any purchase that, that I can get. I have a lot of agents. I'd say probably over 50 realtors that consistently are sending me business. And right now there's a really good time for people that still want to buy and they plan on keeping the house, right? If you're planning on buying and you're trying to move out in a year or two, or you're trying to, maybe sell that house, or you are banking on every single thing was banked off you, like selling it in 2 years, you shouldn't buy a house. Because if the market does drop, what's going to happen is you're just going to buy and you're going to be upside down, right? You're going to lose that equity. If you're planning on staying for 3 to 5 years, it doesn't matter when you buy. I mean, could you get maybe a better deal if you wait a month or two or a year or two? Maybe, but we don't know what's going to happen, right? We don't know if it's going to collapse, or we don't know if everything's going to go back to normal, right? And so right now, purchases, there's not a lot of realtors right now that are not getting contacted. I can tell you right now, I'd say 90% of loan officers across the country, their only focus right now is on refis, right? And so if they're only focused on refis, even though you can't physically meet these agents, it's a perfect time for you to actually develop that relationship with them, right? Educate them. I do Zoom calls with realtors all the time, and they're freaking out. I had an agent call me the other day. They're like, Wells Fargo left the jumbo world. I go, no, they didn't. Wells Fargo halted third-party origination. So Wells Fargo, the bank, is still doing, what jumbo. They're just not allowing third-party originators. They're not allowing, guaranteed rates, and they're not allowing people that, even like, for example, UWM that has jumbo products that maybe goes to Wells. And so the more you educate, real estate agents during this time, you're just going to build your credibility through the roof. And I'm noticing right now that most people, they don't even want to talk to an agent right now. They're so focused on just getting refis, but it all comes down to time management. What are you doing for 8 hours? I know you don't sleep. So you work from 3 a.m, and I'm in a text message thread with you. So your last text message has probably 10. So that's about 12. You sleep 3 hours a day. So you're working all day long, but what are people doing, you know, on a day-to-day basis right now? We're all working from home, right? So if you're saying you're too busy to call an agent because you're working on refis, you're lying, because I know you're not too busy. I know for a fact you're not too busy. Nobody's too busy right now if they time manage right. You know, I had people in my office and that they were like, look, I'm trying, man, but I got to get these docs out, or I'm too busy. I couldn't generate new business. And so I literally sat them down. I took 9 to 5 and I broke it up into 15 minutes. I said, what do you got to do today? I got to get these docs out. All right, well, that's block 1, and technically that's not your responsibility. That's your processor. So cool, that's done. What do you got to do today? I gotta call this person. All right, that's block 2. I gotta sell these 3 deals. Block 3, block 4, block 5. Cool. That's it. You have the whole day free, right? And I think people, they get so weird about the deal that they have in contract. Or like if you have a refi, you're like, man, I got this refi. I can't let this die. So what do you do? And I know, because I used to do this. I mean, I'm only telling you because I've been doing this for a long time. I was one of those people. Shelby was one of those people. You know what we did every day? We just hit refresh on our inbox. Any new emails come in. Refresh, 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 refresh. We're constantly checking to see if we got an approval. And it's like, we're just literally sitting there crutched, handcuffed, because we're so worried about this one deal. I don't think people are prospecting enough. You know, they're not doing themselves a due diligence of what's out there. I think the biggest difference between me and, you know, some of the other top producers that do a lot of volume is finding value. Like, why would a client want to refinance? Right? I mean, I wrote down some notes here just because I know probably not a lot of people have watched the podcast that I put on. I'm going to give you a perfect example. This is a real life scenario that I just did. And I'm going to give you, you know, this client has a $300,000 mortgage. Okay. They were at a 4.25%, a little less than a year ago. You know, that payment's $1,476 per month. I offered him a 3.75, same loan amount. The loan amount's $300,000. The guy told me, he's like, you're absolutely crazy if you think I'm going to refinance to save $87 a month. I said, all right, well, let's talk about it. One, how much is it costing you to refi? Oh, it's $5,000. How much is it costing you out of pocket? Oh, it's the same thing because it's out of my equity. No, it's not. It's costing you nothing out of pocket, right? For when this person had an appraisal waiver. So your loan amount is going to go up, let's say $4,000 or $5,000. So I go, okay, well, it's going to take me 50 months to break even. Okay, so that's the consumer's perception. I think that's the perception for a lot of our loan officers. Well, if you don't have to make a payment the following month, it's financed into that $5,000. That's why your loan amount's going up. And let's say April, have you made a payment for April yet? No, I haven't. Perfect. We're going to close this in 10 days. Your loan amount's going to go up $5,000. You're going to take the 2 months that you're deferring and you're going to apply it back to the mortgage, and your balance is the exact same. So for one, that objective of it's going to cost me money, that went out the window. 2, I don't want to restart my loan. Man, I've been in it for a whole 9 months. Okay, well, if they take that $87 payment and they apply it back to their mortgage, they have 27 years left. So let's just stop right there. How can anybody tell you no? Like, realistically, you're not increasing their balance, and maybe if there's impounds or something and they didn't get it back or whatever, you might increase it $1,000. But how is that costing you money? How are you restarting? If you're telling me you're going to restart, I'm telling you make the same payment. It's only $87. 29 years, 27 years. I'm not going to go too much into detail because that is a scenario that I think that 99% of brokers or better or any loan officer can't sell. Right away, they wouldn't even have looked at it like that. They go in there and they're like $87 a month. Next. I look at it like, damn, I'm going to take 2 years off somebody's mortgage for free. All they have to do is restructure the loan with me. So either they're lazy and they don't want to do it, which is understandable. I mean, that's a real excuse. Hey, I don't want to go through this process again. Cool. I can understand that. I think it's stupid, but it's not costing them more money. And it's not. I mean, people have this misconception that this equity in their house is theirs. Equity in your house is not yours. You can only get it 2 ways. You either sell your house, now you got to pay realtor fees, or you refinance and then you can pull some out. But you know what people don't think about? 0% credit cards. I have clients all day long that are like, I got to transfer my credit cards around. 0% credit card. You know, they have that mentality to them is okay. That they're going to just move balances around, and as long as they don't have to pay for it for a year or two, that they're totally good. No, that's wrong. You know, at the end of the day, I look at, and I know Ramon does a really good job of this, and I know Matt Oliver does a really good job of this. And if you just look at their numbers, I mean, they're in the top 15 every year in the entire country. It's just finding some value on there, right? I wrote down another scenario right here that actually completely blew my mind. And if anybody is writing down these notes, so you have a client that has a $300,000 mortgage, and they're at a 3.25% 30-year fix. They've been in it for 1 year. They have $1,000 a month in credit card debt, car debt, whatever it is. Sometimes automobile debt I leave out because it's installment. $1,000 a month in debt. You pitch to that client, you're going to go from a 3.25% to a 4%. What are they going to tell you, Casa?
They're going to tell you to go pound sand.
I'm going to raise their loan amount from 300,000 to 350. That 350 is going to pay off $1,000 a month in credit card. But now they're going to 4%. They're going to tell me go pound sand. I'm going to tell them this: if you don't do anything right now, you have a 3.25 on a 30-year fix, and you have a 9, 10, 15, 20, 22, whatever, on all these other debts, paying $1,000 a month. If I refinance you and I take you from a $300,000 loan to a $350,000 loan at a 4%, which is not realistic because right now we can do cash out way lower than that, and you take that $1,000, it's going to take you the rest of your life to pay off. Because if you have $1,000 in debt, you have $50,000, you're never paying it off. And you apply that back to your mortgage. Guess how long it takes for them to pay off their home?
How long?
14 years and 5 months. Versus 30.
Yep.
29 or 28. That's a fact.
But see, like that is like this is where the expertise comes in, and this is where this conversation I had earlier this week. We talked about, sort of Mike Cox mentioned it. He basically said, I won't give a quote until I have a credit app done and I can review everything. And it's true, because like the customer is not coming to you because they're the expert. They're coming to you and they have a want, whether it's I want a lower rate, I want a lower payment, I want this, I want that, but they don't actually know what they want because they don't know what their options are. So for you, or for us as the mortgage advisor, it's like, we got to look at this as a big picture situation. Like, look at their debt service, look at their equity situation, look at their cash flow, look at their savings. I mean, like sometimes I look at people and I'm like, it's great that you have this amazing rate, and they might not have debt, but like they have no money in the bank. So like that's another thing. It's like sometimes you got to tap in your equity so you can put, like, you need to have money in the bank for times like this. And be in a situation where instead of when something in life comes up where, hey, I want to put a pool in, or I want to do an addition, or I want to do something like that, then you have to reactively borrow. It's like right now money's so cheap. Like, are we tapping into that as a part of our value proposition?
I don't think people are, and I think that this big misconception that homeowners have is they have it figured out. They figured out how to get out of debt. All right, I had literally last month another client. They had this whole game plan on how they're going to get out of debt in 5 years. They're going to save X amount of money, and they have it all written down. And I heard them out, and I'm like, I'm so glad that you guys came up with a proposition. Now, why don't you just get rid of it tomorrow? What do you mean? Just get rid of it tomorrow. Let's just pay it off right now at a 3.5% or a 4% or whatever it is. It's gone. They're like, yeah, but I'm touching my equity. And it's like, I hear that all the time, and I'm sure anybody that's listening to this, the clients don't want to touch their equity. They're like, it's like their safety net. They think that the equity in their house is their life savings. And it's a rude awakening for people, is that money is not yours ever until you sell it, right? And so I told them the same scenario. I go, look, how about this? We're going to pay everything off next month, because I don't want you to do a 5-year plan. But here's what I'm going to do for you. I'm going to have you do a 5-year plan with me. You're going to take and this client had way more than $1,000 in debt. You're going to take that money and you're going to apply it back to the mortgage for 5 years, that's it. That's it. Because you have it planned that in 5 years, you're paying off all your debt. And I showed them on an amortization calculator, and they were like 75,000 to 100,000 less that they owed after taking out the 50K to borrow it. Right? It's just simple math, right? The beauty about our industry is that we can quote facts with amortization charts. I remember when I first got started, my boss and some of my coworkers used to be like, hey, you take this money, you play in the stock market, and you get a return. That's BS, because we don't know if that's a fact, right? You can't just invest in the stock market and know what your outcome is going to be in 5 years. But for a fact, when you're taking mortgage interest and you're taking an amortization calculator, that if they apply X amount of money comes out in X amount of years, right? And so I think the big problem that people have in our industry is that they don't put it down in writing for anybody. If you pitched my wife a mortgage and you told her she was saving money, by the time that I got to them, I'd be like, you're an idiot. Why are you even pitching my wife? She doesn't know anything about mortgages. No disrespect, baby, if you're listening to this, but you're pitching the wrong thing. And even if you pitch the husband, right? How many people that are on this group, I don't even know, because I can't even see anybody watching it, but I can almost assure you that 9 out of 10 people do not pitch both parties, husband and wife, at the same time. Am I right? I mean, you probably don't. I don't always. But you know what I do? I break it down in writing. Because if you break it down in writing, then it doesn't matter whether the husband looks at it or the wife looks at it. Before they call you back, they're both going to look at it.
What are you using for the amortization side? What are you using to calculate that?
I use mortgage-x.com. It was an old school amortization calculator I had. I think when I used to work with Dan Maybaum and Bob Bates and Frank, who works with me now, and a lot of people at Paramount, we used to use that. Now it's a waste of time. Go to MBS Highway. MBS Highway has every single mortgage calculator that you can have in 5 minutes. I'm going to actually move my screen over so you guys can see this one. I have one that I can create, and it's going to literally take me, I think at the most, let's say 30 seconds. All right, I'm going to move this. See if you can see my screen. Can you see my screen?
Yep.
All right, I'm going to go to MBS Highway. There it is. I don't even know how much it costs, but it's maybe $200 a year. Oh, wrong one.
What do you? What internet connection? You on dial-up?
It's freaking. My whole thing right now is so slow. I have a new development that I have, and our internet's the worst ever.
We can see. All right, so MBS Highway, we only have a couple more minutes. So MBS Highway, everybody knows that's Barry Habib's offering. So he's got mortgage calculators out there. So that one's the amortization.
Here it is. You're going to go to calculators. You're going to go to amortization. One click, super easy. You can do one mortgage or compare them side by side. So let's compare two mortgages side by side in 1 minute. I do need to work on my internet speed though. I don't know what the heck's going on. If we really only got a couple minutes, I'm not going to waste my time doing it. But basically,
the end all be all. That's your side by side comparison.
It's super, super easy, right? You have two comparisons. You put their current loan, you put what their rate is, you put what their payment is, you compare the other one, put them side by side. It'll ask you, do you want to make an additional principal payment? You put the amount that the client would be saving, right, which is equivalent to their normal payment right now. And within 20 seconds, it prints you out an exact chart with graphs in color, 3 pages long. It breaks down the entire payment, their old loan, their new loan, how much they're saving. And the clients really can't say no to you, right? I mean, if I can give somebody, that's listening a couple of advice on just like how to open up a conversation, it's really simple. If you can save somebody 3 to 7 to 10 years off of their mortgage without increasing their payment by $1, would they listen to you?
Of course.
And right, of course. That's all you need. That's it. If you guys are cold calling or you have a database or you have, I don't care how the hell you get the lead. Guess what's public information? 3 things. their address. You go to a property profile, you know when they took out the mortgage. So you can put in mortgage or MBS highway. This person took out the mortgage in 2011. This was their payment. All you got to do is ask them what the rate is. That's public information. You don't need to pull their credit. Ask them what their credit is. You go in there and you price out a loan at 1 back, 2 back, whatever your compensation is. Borrower paid, lender paid. I don't care how you do it. And you put together, you're like, wow, I can save this client $200 a month. Some clients don't give a shit about $200 a month, right? They don't. They're like, $200 a month? I'm cool. All right, well, I'm going to put $200 a month in this category. Wow, I can take them from 27 years to 19 or 22. Like now it's like you get them thinking, right? You get the person that's like, I'm not doing any of this. You get them thinking. It's like, if I do nothing, I can do 22 years or I can do 27 years. What, am I being stupid right now? You know, another big thing that my loan officers do, and I know we were always taught this, pad the payoff, right? Do you pad loan payoffs whenever you get them? Do you pad a payoff cost every time you pitch a mortgage?
Basically, when you're the way I would always do it is I would literally take whatever their current principal balance is, and on the new loan, I would usually overestimate the escrow. Yeah, I would overestimate the escrows, and that's where I would kind of explain it. Because at some point, you're right. You have to have that buffer that whether it's in the payoff or up front that you have to
Well, I'm going to give you my method of it, and this is just how I do it. It's going to come up no matter what, right? Here's the problem: clients don't understand loan payoffs. If you pitch to somebody and you know you have a $400,000 loan, and you know that they are really going to owe 403. Right? And you know that by the time we put it in pounds, they're going to owe 408. And you have $1,000 processing fee in there. The only thing that consumer sees is Costa told me there was really no cost. Yep. And this is bullshit. I don't know 403. I only owe 400.
Yep.
Oh my gosh, he's raising my loan up to 410. I'm not even going to call him back.
Yeah, you got to explain all that up front.
So you explain it up front because you're good at that and you have a lot of confidence. Some people don't. Right. What I do is I make sure that when the payoff comes in, it's not going to change the LTV, right? Because if I have to raise their loan amount up, it's not going to change the LTV or pricing. I use what's on their credit report because at the time that I'm selling it, the husband or wife don't understand loan payoffs. They don't. Some of my loan officers don't understand loan payoffs. Yeah. And I submit the file based off of what they think that they owe. As soon as the payoff comes in, I have that conversation with the client, or I have my processor have the conversation with the client. Hey, your mortgage statement came in at 470. I don't know if you're on a biweekly payment or not, or if you pay early, or if you pay at the end of the month. So I didn't want to guess what you owed. I just put what was on there to make it easy for you. It's actually $3,000 more. Do you want to bring in next month's payment to close and just keep the loan amount right where we had it? Or do you want to finance it? If you want to finance it, we can bump your loan amount up a little bit and you don't have to pay it out of pocket. 99% of the time, they say do that. But unless someone like you explains it,
they won't. They'll never. And then they'll suspect the worst, which is that you're trying to pull one up on them.
You do.
So everybody, unfortunately, I have a hard stop right now, but everybody, we dropped the link in the comments here for the podcast that we did with Peter back in December or November. I believe it's either November or December, but we talked a lot in that podcast about structuring deals, time management, creating and presenting your value proposition. Pete, if it's good with you, maybe what we'll do is we'll do a follow-up next week and come back on some of these topics.
Yeah, we can. I have 15 things that I wrote down that I think can benefit people left and right, and just things that they're not thinking about, right? Just some of the stuff that I might have talked about, it either would have triggered something in your head or they're like, man, I'm doing that anyways. But, just to put it in perspective, the top 20 loan officers in the country are doing 300 to 400 loans a month or a year. In order to do that, let's make it really simple. If you want to do 400 loans a year, how many loans is that a month?
Yeah. You got
right.
How many loans a month, and how many apps a month, and how many contacts to get to those apps. Those are all.
You got to do 33 loans a month.
So I got to hop off now, guys. But Pete, let's do this. Let's do another one next week and follow up on this.
Cool.
And everybody, we're dropping the link in the comments. Broker to Broker podcast with Pete Galvez. It's really, really excellent, and it's timely, especially right now because we're all going to be focusing on refis and we're all going to be focusing on our value proposition. Talks a lot about structuring there. So, thank you, Peter. You're the man. Keep dominating.
I appreciate it. If anybody has any questions, reach out to me personally, or let's talk next week because I can give you guys 15, 20 pointers to help you guys, basically beef up your pipeline right now.
Let's do it.
Cool.
All right, guys.
Stay safe.
Thank you, Peter.